While it used to be easier to spot a unicorn in your backyard than to snag a luxury watch below retail, it seems the tides are turning in the watch market. We've been keeping an eye on some intriguing shifts. Turns out the rumors have some weight. Several Rolex models are now lounging comfortably at authorized dealers, sporting price tags that are surprisingly shy of their usual peaks. And it's not just a Rolex Fiesta. Other high-end brands are also sneaking below retail on the secondary market, with some even bold enough to flash discounts in their ads. Welcome to Opulent Oasis, where today we're decoding why luxury watches are suddenly within arm's reach and what this means if you're looking to jazz up your collection. Haven't hit that subscribe button yet? Now's your chance to stay in the loop on all things elegantly timed and brilliantly priced. Let's hit rewind and head back to 2019 through 2022, when the luxury watch scene was more like scaling Everest, lofty and nearly impossible to conquer. Back then, snagging a coveted watch wasn't just tough, it required a hefty wallet, turning the secondary market into a playground for flippers and the investment-savvy crowd. The Rolex buzz really picked up steam during this era, all thanks to the excitement sparked by the 2015 release of the ceramic Rolex Daytona. As prices rocketed and the chatter increased, watch brands caught on. By 2018, they started tightening their grip on their stocks, not to crash the party, but to keep their brand prestige from sliding into the grey market abyss. For years, the watch industry behaved like a buffet, relentlessly stacking the table with everything from the flashy Omega 300M to the less exciting Omega DeVille. The game plan was simple: cram the showcases and wow shoppers with bold ads. But there was a twist. This flood of watches led to mountains of unsold inventory, which eventually trickled into the secondary market at discount prices. This excess didn't just overwhelm dealers, it also watered down the brand's cachet, making even the keenest buyers pause and reconsider paying top dollar. Then, just as watch production decided to take a breather, the COVID-19 pandemic scrambled everyone's travel and shopping plans. Prices soared as watches became as scarce as toilet paper in March 2020. But hang on to your hats, because the market's sizzling fever is showing signs of cooling. Prices are beginning to dip, and that red-hot watch market, it's chilling out. Two-tone models that were once hotter than a July grill are now just a showroom visit away, and those elusive models, they're popping up without the long wait. This trend isn't just a Rolex phenomenon. Other brands are feeling the cool down too, with some models now only a casual month-long wait away. Despite high hopes for a holiday shopping frenzy, the anticipated Christmas spike didn't materialize, leaving luxury brands like Rolex cooling their heels in the discount bins of the secondary market. Now top-tier brands are feeling a distinct chill in their allure. It's not just a blip on the radar. Swatch's annual summary for 2023 shows some solid numbers, but they couldn't quite spark the fireworks of the previous year. As the year wrapped up, even Swatch had to admit the party was losing steam. They're keeping their spirits up for 2024, hopeful for a market revival. Meanwhile, LVMH is also surfing the slow wave in their watch sector, and Watches of Switzerland's latest outlook isn't exactly painting rainbows. They're feeling the frostbite from the sales floor. Globally, the scenario varies. Europe is clutching its wallet a bit tighter, while over in the Middle East and parts of Asia, a growing millionaire club keeps the luxury tills chiming. Each region dances to its own luxury tune. Shoppers in the US, France and Germany are hunting for value, but step into India, the Emirates or China, and it's the brand's swagger that turns heads. Hang tight. Why not subscribe and join the Opulent Oasis community? Get the latest scoop on our cutting-edge content. Now back to the topic. On the manufacturing side, patience is getting thinner than the leather on a well-loved vintage watch strap. The industry's heavyweights are feeling a shift, the heydays are dimming, and the market's excitement isn't quite popping like champagne anymore. There's a flicker of optimism, but it's not exactly igniting fireworks. Looking down the road to 2024, they might just find themselves with a surplus of watches turning into fancy dust collectors. Here's the scoop. Our wallets are feeling the pinch thanks to good old inflation and a few economic potholes. The usual suspects, investors and those flip-happy collectors, are keeping their wallets closed a bit tighter these days. It could be the hefty price tags or decisions that hung around too long, marinated in pandemic-era thinking, but watchmakers are realizing the old magic isn't working like it used to. They're trying to adjust their sails, but let's be real, steering this ship is more like maneuvering a cruise liner than a speedboat. The wave of new models in 2023 was supposed to ride the high tide of the previous year, but guess what? Turns out people's budgets and their patience aren't infinite. While people still have a soft spot for a snazzy watch, they're becoming pickier and more careful with their choices. We're spotting signs of an oversupply, partly because brands are a bit on edge about running out. No one's eager for a sequel to those days when finding a watch was like snagging a front-row seat at a sold-out show. This surplus has led to a situation where there are more watches lounging around than there are wrists itching to wear them. It looks like this could translate to price cuts, more options on display, and less of a mad dash to claim the latest model. While we're not expecting the market to take a nosedive, it seems we're edging back to a steadier state where most watches will still command a premium. But if you know your way around, you might just score one below retail, especially if you pick the right brand and model. As we sail into the future, watchmakers noticing a slump in demand will need to rethink their pricing playbook. Simply hiking up prices isn't going to fly as a long-term strategy. They'll need to fine-tune their approach to value and pricing, ensuring profits stay healthy without making customers' wallets cry for mercy. Take Rolex, for example. They've taken a more reserved approach to price increases this year, stepping away from their usual leap-and-bound strategy. In some areas, they've even hit the pause button on price hikes, proving they're not just chasing the quick buck. While upping prices used to be the golden ticket during boom times, in today's more cautious climate, manufacturers need to play it cool. Cutting back on the glitzy limited editions and evaluating which models really deserve their spotlight could be the smarter play. When the cash was flowing freely, rolling the dice on a few special releases felt like a smart move, but with watches now gathering dust, doubling down on those limited editions might not be the sharpest strategy. When sales start to wobble, brands hit a fork in the road with their new releases. They can either spice things up with a fresh array of models and options, or stick to the old faithfuls. More often than not, the industry giants choose safety over spice, opting for stability to safeguard their market share. This conservative path might not set hearts racing, but in uncertain times, it's seen as the smart play. Marketing becomes a lifeline in these situations, as Swatch will tell you, emphasizing the need to keep those promotional gears turning. However, the reflex to slash marketing budgets when the going gets tough can backfire spectacularly. Brands that keep their marketing vibrant and even dial it up a notch are usually the ones riding out the storm with flair. Meanwhile, consumer tastes are drifting towards the underdogs, the smaller, niche brands that deliver quality without the eye-watering price tags. Brands like Forks and Christopher Ward are making waves by offering top-tier watches that won't clean out your wallet, attracting customers who feel the big names are overplaying their hand. This shift is nudging the larger brands to step up their game and rejuvenate their lineups. Innovating in movement, bracelet designs, and overall specs may well be their ticket to keeping those premium price tags without making customers balk. The high-end watch market might be feeling a bit of a pinch, with favorites from the likes of Patek Philippe and Rolex still stealing the show for the watch aficionados. As we look ahead, there's a glimmer of hope that more coveted timepieces will become easier to snag, possibly even at prices that don't make your wallet wince as the economy starts to perk up. Consumer confidence is looking to get a boost, which could kickstart a fresh wave of demand. Yet the wild ride of fluctuating prices, driven by the whims of consumer sentiment, might just keep chugging along unless the watch industry manages to learn a lesson or two. For now, the focus is crystal clear. Keep those watches in stock and keep the regulars happy. What do you make of the latest scoop from the luxury watch scene we've shared in this video? Drop your thoughts and feedback in the comments below. If you enjoyed our chat, give us a thumbs up, and don't forget to follow us for more deep dives. Hit that subscribe button for all our latest updates. Catch you in the next video from Opulent Oasis. Can't wait to see what you got to say.